Hello, trading is closed on August the 1st, 2018. Yesterday we had some calls. We had a target of 28.2242. That was this high, almost to the penny. We said that unless we took this high out early, lower prices should print. It took an hour and a half to take it out. It's kind of an equivocal early to me. Usually, I mean, it gaps up and without consolidating goes straight through this high, typically within the first 30 to 60 minutes, but I'm going to call that kind of a wishy-washy signal. Not as clear as I would like. Would have been much clearer if we didn't take this out at all. But anyway, if you concede that this wasn't prompt, then we did get the drop that we called for. Tomorrow's pattern is the one with the early high as a late high. Tendency to rally all day, close near the high, but if it fails in a straight line down, and depending upon the early action, there's a real chance of that happening tomorrow. Here were the MEJT signals. Only one we got was said that was a false move, and it did retrace. Now the FOMC announcement was made here. Typically you get 3 legs, each one further away from this announcement than the last, and you'd like to say that's 1 and that's 2 and 3 is coming up. The catch is, if you look at the 1-minute chart, we already had 1, 2, and 3, and that's enough. So this signal's already been satisfied. That pattern's been satisfied. Now, the first move after the announcement typically tells you what the next move of consequence is. And the first move after the announcement was a drop. Now, tomorrow's pattern is the one with a strong tendency to rally. What are the odds that the drop plays out tomorrow? Well, there is a chance. Here's the daily chart. Now, DeMarc's stuff has 9 bars of setup, and that's been met. And then you get 13 bars of countdown, and when bar 13 is called, that's the area of the high. Acknowledging this hasn't worked too well in the whole rally, it has a rule that says any rule you have for the 13 bars of countdown will work, as long as you're consistent. Now, if you take the rule that you want to close higher than the close of the previous day, you can count 1. This close is higher than this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Well, I had 13 before. Let's try it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Here's bar 13. So according to that variation of his rule, here's a sequential sell signal of yesterday's trade. The general idea was that this was an impulse. This whole thing is an overlapping corrective wave, and if this is the end, you'd like to see an impulse down, even though it isn't required, because this could be A and B and then C, but you'd really rather see an impulse down. If you look from this high, it's pretty easy to count this as a non-overlapping impulse. Here's your 1, 2, perfect fib ratios on your 3, A, B, C, with C equal to A, wave 4 and wave 2 having a Fibonacci relationship, and this would be the start of wave 5. This peak is a Fibonacci retracement of the whole decline, if we start dropping in a wave 3, there's a perfectly valid count that explains it. And it's, I think, important. You can count this as an impulse non-overlapping on the drop, and you couldn't do it all the way up here. It's possible the worm is turned. We really would like to take out some of these lows for confirmation. And as I said previously, you want to take out this low here, which is 27.89 and change. Suffice it to say, if we don't gap and take this out early, lower prices should print tomorrow. And the rally's in a very vulnerable position. And it wouldn't take much to convince me that that high is going to hold and a significant drop is starting. That's today's call.